Here I am again, hesitating on another trade, just to stand by and see it hit my TP. Too many doubts. What if I lose? How much should I risk? I made emotional decisions, blew several accounts, and eventually felt like I wasn't cut out for trading. But I learned over the last couple of years that pro traders don't hesitate. At first, I learned from multi-level marketers and retail traders I found on Instagram. I quickly realized that I needed to find the pros. So I read over 40 trading books to find out what I'm missing. I kept hearing one reoccurring theme amongst the elite, and it is detailed in full by a book written by this guy.
So to be in the top 3 at our firm last year, you need to make approximately $20 million in net trading profits. To be in the top 3 over the last 2 years, you needed to make over $35 million in net trading profits.
In this video, I'm going to share the thing that I acquired that took me from earning a few $100s per trade to $4,000 to $6,000 per trade. It doesn't matter if you trade Forex, commodities, indices, or crypto. This one thing will help make you 10 times better. In the Playbook, Mike Bellafiore writes, "You do not become a great trader by being shown cookie-cutter technical setups and then soon becoming successful. That is a myth from what I call Trader Disneyland. Your Playbook's contents are up to you, but its existence, with all due respect, should not be. All traders should build a playbook." This is what changed my entire trading career. The playbook is a series of archived trades that make the most sense to you. The idea is to build upon your strengths and minimize your weaknesses. Developing a playbook helps beginners and underperforming traders make more money from their best setups and helps them get rid of trades that are unworthy of their attention. The key to optimal trading is to stick to what you trade the best. That can be scalping, intraday, swing trading, that can be one pair, multiple pairs, or the entire market. It's all about you. In the beginning, traders make the mistake of hopping from one strategy to the next instead of finding one that works for them and becoming better at it. As a trader, you are a business and your strategy is your service. You need to master one strategy before moving to another. So now let's talk about what to include in your playbook. First, the big picture. You need to know where the large institutions are pushing the market. Let's take a look at US 30 back in April during a strong decline. The banks and the large institutions were unloading their positions. And selling during this time is less risky for us as day traders, and we have the potential for a higher reward during these times. Beginners normally will get caught up on the lower time frames during the pullbacks. They may make some small profits, but if they continue to trade against the momentum in the higher time frame, then they'll take a lot more losses. Pro traders are taking advantage of the momentum that is going to come into the market brought in by the banks. Pro traders know is that when the banks are selling, they want to sell at the highest price. So we see this large break of structure here. We are expecting that and anticipating to sell when it comes for a pullback. And the reason why the pullback is such a high probability move is because those large institutions normally have a lot of shares, and they can't unload all of their shares at once, or else as they're unloading shares, unloading a lot of volume, price is going down. The value of the shares are going down. So what you see here, 1, 2, 3 times, the institutions, the large institutions waited for price to go back up. Then they unloaded again, waited for price to go back up because they want to sell at a good price to make the most profits for the investors. So they waited again for price to come back up here, and then a massive sell, okay? Understanding the big picture and where the institutions are pushing the market. They may be unloading orders or maybe accumulating orders and about to rally the market. You want to be watching the big picture so that you know on the lower time frames where your targets are and what the highest bias should be for you. So here, once the market breaks with this large sell position, we're anticipating that the market will go back up so that if they want to continue to unload their shares, they're unloading at a better price. And we'll see that continues on down. So we're just looking to sell until price breaks that daily structure. So first thing you want to have in your playbook is the big picture. Next, it's intraday fundamentals. You can build plays off of fresh news, government investigations, new products, rate hikes, reports of wars, and much more are catalysts for volatility. If you study your pair around certain news events, you will find a pattern. When Jerome Powell speaks about rate hikes, we can expect a big reaction from US 30. Unfortunately, during the announcing of wars and invasions, people buy gold. These are only two of many news events that traders can take advantage of. Next up is technical strategy. You should have the details of your technical confirmations written out clearly. It should list out on the lower time frames what you need to see in regards to market structure, zones, and candlestick signals, even indicators if you use indicators. The market just repeats itself. So you want to have hard confirmations that will eliminate doubt. Let's take a look at my playbook. You'll see that I organize my trades by the big picture. I have daily supply, daily break and retest, and more. As I click into the higher time frame big picture setup, I have smaller time frame setups that will allow me to extract money from the market. One thing that you should notice is that I have the entry criteria written out clearly for me to eliminate doubt in the live market. What you see here on the screen on the left is the higher time frame 4-hour supply, and on the right you'll see the lower time frame setup, entry criteria and confirmations. This is key. This is critical for you to have in place so that you won't have to think about too much. Everything is set in a process. If confirmations are there, you just shoot. Next up is trade management. I enter and exit from specific criteria. You should have that listed so that you don't make emotional decisions on the fly. Once you're inside of a trade, it's hard to think objectively. So in order to avoid the emotions, you should have hard rules on exiting and entering. You'll notice in my playbook, I have a column for exit criteria. Normally, since I'm following the 4-hour trend, I target the next high or low on the 4-hour. So I've listed that there, and I don't exit based off of how I feel or how much money is in the MT4. I have a process, and I always exit based on my criteria. This is very important. Greed can take over, emotions and fear can take over in many situations if we don't have specific exit criteria listed for each one of our setups. Next up, we want to list the grade of the setup to help us determine how much we're going to risk. I can't emphasize this enough. In my playbook, I have a column for the grade of the setup. What I've learned from personal experience is that if you focus on your A setups and your A plus setups and you give them a higher size, you will come out at the end with higher profits. In the beginning, I gave all of my setups the same amount of risk. A plus, A, B, C setups. What kept happening is that the C and lower grade setups will cause losses that I didn't need to take. When I got rid of those setups and gave higher risk to the A and A plus setups, I saw significant growth and significant gain. I highly recommend that you go through each one of your setups and give them a grade, and you work out a risk table like you see here, where you give the higher risk to the A and A plus setups, as well as your equity increases, you raise that risk, and as you go into drawdown, you decrease the risk. Later on, I'm going to make a video on having a drawdown playbook, because when you're in drawdown, you have to consider that your equity is decreasing and you have to change up the way that you trade a little bit. This may seem like a lot. Click the link below for my playbook template. If you want to learn how to use a playbook for live trades, watch this video.